Many of you have heard or even gotten offers of buying Bitcoin in its early beginnings, practically costing nothing compared to how one Bitcoin is represented in today's actual currency. Many of you may have also ignored these offers, seemingly disregarding the concept of cryptocurrency in its infancy. While some may have eluded the dubious call, many bought into the craze and now find their lives have changed due to a sudden influx of an erratic digital currency, with oftentimes an exponential chance of incredible increase with higher risk of crashes and downright trends. While the technology may be relatively new, compared to the financial institutions the world has gotten used to, the cryptocurrency of today continues to unravel and push the limitless potential of e-commerce on through to the future. Hello everyone, and welcome to Techtastic. In today's video, we're taking a look inside the cryptocurrency revolution. Before we jump into it, you know the drill. Give us a thumbs up, as it helps us out a lot. Hit that subscribe button with the notification bell for future Techtastic updates. What is cryptocurrency? The term cryptocurrency refers to decentralized digital money based on blockchain technology. This digital asset, designed to work as a medium of exchange, allows individual coin ownership records stored in a ledger existing in a form of computerized database, using strong cryptography to secure transactions, to control the creation of newer coins, and to verify the transfer of coin ownership. There is absolutely no physical form used in cryptocurrency, much like the more accustomed paper money or certified bonds, with cryptocurrency generally using decentralized control as opposed to centralized digital currency and central banking systems. Nowadays, people may be familiar with popular versions of blockchain technology that circulate in cryptocurrencies, such as Bitcoin and Ethereum. But there are also currently more than 5,000 different active cryptocurrency. One may use crypto to buy regular goods and services, while people also use them to invest in other cryptocurrencies as they would in other assets, like stocks or precious metals. Unlike the US dollar or the euro, a cryptocurrency is a medium of exchange that is digital, encrypted, and decentralized. There is no central authority that manages and maintains the value of a cryptocurrency. According to market research site CoinMarketCap.com, there are more than 6,700 different types of cryptocurrencies that are traded publicly, with more cryptocurrencies continuing to proliferate, raising money through initial coin offerings or ICOs. As of December 2020, the value of all cryptocurrencies was said to be more than $645.7 billion, and the total value of all Bitcoin, the most popular digital currency, was pegged at about $421.7 billion. Bitcoin, which was first released as open-source software in 2009, is the first decentralized cryptocurrency. It was first introduced on October 31, 2008, through a paper published on the cryptography mailing list at metsdao.com, which described a digital cryptocurrency with the title Bitcoin, a peer-to-peer electronic cash system. Said to be developed by a name without a face, Satoshi Nakamoto, an elusive character who authored the Bitcoin white paper, created and deployed Bitcoin's original reference implementation. Nakamoto is also said to have devised the first blockchain database in which cryptocurrency runs on. While many people have claimed to be Satoshi Nakamoto, the originator of crypto is still unknown to this day. How does it work? Cryptocurrencies work using a technology called blockchain. A blockchain is a decentralized technology spread across many computers that manages and records transactions. Security is considered to be the main appeal of this technology, with no specific governing body regulating transactions. Instead, the concept of regulation and task of overseeing legitimacy is broadly distributed among cryptocurrency users via the internet. This electronic payment system is therefore based on cryptographic proof instead of trust, with this cryptographic proof coming in the form of codified transactions that are verified and recorded in a form of program called the blockchain. What is a blockchain? A blockchain is an open distributed ledger that records transactions in code, basically acting like a checkbook that spreads across countless computers around the world. Transactions are recorded in blocks that are then linked together on a chain of previous cryptocurrency transactions. With blockchain, everyone who uses a cryptocurrency has their own copy, creating a unified transaction record. The software logs each new transaction as it occurs, and every copy of the blockchain is updated simultaneously with the new information, keeping all records identical and accurate. Each transaction is checked using one of two main validation techniques: proof of work or proof of stake, in order to prevent fraudulent activity. Proof of work is a method of verifying transactions on a blockchain in which an algorithm provides a mathematical problem that computers race to solve. Each participating computer, referred to as a miner, solves a mathematical puzzle that helps verify a group of transactions or a block and adds them to the blockchain ledger. The computer that's able to successfully complete the task is first rewarded with a small amount of cryptocurrency. This has led to plenty of firms actively participating in this game of speed and computing power. Proof of stake is a verification method used by some cryptocurrencies to reduce the amount of power necessary to check transactions. Using proof of stake, the number of transactions each person can verify is limited by the amount of cryptocurrency they're willing to stake or temporarily lock up in a communal safe for the chance to participate in the process, acting like a collateral when transacting with a bank. Both proof or stake and proof of work rely on consensus mechanism to verify transactions. While each proof mechanism uses individual users to verify transactions, each verified transaction must be checked and approved by the majority of ledger holders. This means a hacker can't simply alter the blockchain ledger unless they successfully get at least 51% of the total ledgers to match their alteration. The number of resources necessary to do this makes fraud highly unlikely in the realm of cryptocurrency. How is cryptocurrency mined? As the cryptocurrency network grows, more processing power is required. This opens up the opportunity for cryptocurrency farms to go mining. Mining is how new units of cryptocurrency are released into the world, generally in exchange for validating transactions. While it used to be possible for an average consumer to mine cryptocurrency, it has now become far too expensive and difficult to perform in proof-of-work systems. Proof-of-work cryptocurrencies require huge amounts of energy to mine, with an estimated 0.21% of the planet's electricity going to powering Bitcoin farms. Miners end up using up to 80% of what they earn from mining to cover electricity costs. How is cryptocurrency used? While the concept of cryptocurrency may be quite popular, its actual application still hasn't achieved maintained acceptance quite yet. You could use cryptocurrency to make purchases online or buying gift cards for retailers and restaurants such as Target, Apple, or Dunkin' Donuts. You may also be able to load cryptocurrency to a debit card to make purchases. With PayPal recently launching a new service that will allow customers to buy, hold, and sell cryptocurrency from their PayPal accounts, making it easier for people to send and use cryptocurrency. Crypto is often used as an alternative investment option outside the stocks and bonds. With the best-known crypto, Bitcoin, considered as a secure, decentralized currency that is also referred to as digital gold, this currency of the future has become rapidly utilizing among the keenest investors. More recently, investment apps have also started offering the ability to buy several of the top cryptocurrencies, including Bitcoin and Ethereum, with applicable fees, of course. This, however, is considered as high risk due to the fact that buying individual crypto is like buying individual stocks, taking on more risk than if you spread it out over hundreds of thousands. The popularity of Bitcoin. Upon its early introduction in late 2009 to early 2010, the price of one Bitcoin compared to the US dollar was basically nothing, citing the first real-world transaction of buying 2 pizzas delivered by Papa John's for the price of 10,000 Bitcoins, an amount that would be equal to $750,000 by 2013. Through the years, the value of Bitcoin and cryptocurrencies in general steadily rose, with smiles and massive market valuations in 2013 and 2017. However, amidst the price increase spikes, sudden drops would also indicate a volatility that continued to bring concern towards the digital currency. Recently, Bitcoin saw a record high of almost $42,000 per Bitcoin on January 8, 2021, but would also see a 21% slide day after devaluating the Bitcoin to as low as $32,389. Bitcoin's prices has more than quadrupled in 2020, but with the erratic and sometimes abrupt drops, Bitcoin's current rise is considered by many financial experts to be unsustainable in the short term and exists largely as a speculative asset. While cryptocurrencies hold the promise of making it easier to transfer funds directly between 2 parties without the need for a trusted third party, this semi-autonomous nature of crypto transactions make them well-suited to host illegal activities, such as money laundering and tax evasion. And since the market prices for cryptocurrency are based on supply and demand, the exchange rate has the tendency of fluctuating widely. These rapid surges and collapses in value surely aren't for the financially faint of heart. but the possibility of preserving value against inflation and facilitating exchange through direct means, making it easier to transport outside the influence of regulation, just may mean earning more zeros at the end of that dollar sign. So what do you think about the cryptocurrency revolution? We'd love to hear what you think about them by commenting down below. And if you're new to Techtastic, hit that thumbs up button as it helps us out a lot. Subscribe with the notification bell for future Techtastic videos. Until next time.